Today, we'll talk about the power of 3, PO3. This is an extremely important video to identify critical entry points for day traders and scalpers. In the first part, I'll do a quick introduction of power of 3. In the next section, we'll talk about accumulation, manipulation, and expansion phases in detail. In the final section, I'll show you 3 different extremely critical trading setups that you can use in your trading life. If you're ready, let's start. With this video, we will examine power of 3. I'll explain all the details about this price action structure. If you are looking for a structured table of contents, you can find it on my website or on the Google Drive, which I share all the documents for free. All in the description. And please try to watch the videos in order, otherwise it can be confusing. Let's talk about the power of 3. It is a really simple trading concept in price action. However, it cannot be used everywhere. I'll show you the specific locations where you can use this structure. PO3 consists of 3 stages: accumulation, manipulation, and the expansion. These names keep changing. Everybody has different names for the phases such as distribution. But names have no importance at all. What we only care about is the meaning of the price action. The accumulation phase is the range phase, the consolidation stage without any trend direction. The longest stage of the 3 phases. What actually happens here, orders keep piling. You can call it silence before the storm. You will generally see the liquidation areas will appear in this phase, equal lows and highs or trendline liquidity. The second phase is the manipulation phase. As the name suggests, faking a breakout to trap the beginner traders who just learned to trade breakouts. Finally, the expansion phase. Price finally moves to its true direction. Manipulation and expansion phases generally quickly happen. However, the accumulation phase generally takes a long time. Let's understand the core of the power of 3 stages. In the accumulation phase, you will see resistance. It could be a classic straight line resistance or trend line resistance. One more time, classic technical analysis work. All the trend lines or chart patterns. However, the problem is beginner traders are not aware of 2 things. 1. High time frames. They never check high time frames. 2. Left of the chart. They never check the left of the chart and do not understand imbalances and other price action structures. They mostly focus on indicators. So, new traders mostly place their orders on this resistance in low time frames, and most of them try to scalp it. This creates liquidity for the market maker. Most of the time, these stop-loss orders are hunted quickly. Again, all new traders will trade this as a breakout as well and place new orders for breakout trades. These stop-loss orders will be hunted again. As you can see, it is a double trap. Let's check this example. This will be a basic example. I will fully cover full trading setup soon. You can see the orders are being accumulated right here and leaving us a resistance line above. This is a 1-hour chart. However, many 5 minutes or 1 minute scalpers will see this as a resistance line and set orders from here. All those stop-loss orders will be taken out, as you can see clearly with the manipulation stage. And then finally price sharply drops during the expansion phase. Very clear structure. Let's talk about trading setups that you can use. First of all, combining high-quality breaks with the power of 3. Once you identify a high-quality break, you may wait for an accumulation phase. With this phase, the liquidity areas will appear. And then we wait for the manipulation phase. It is basically stop-loss hunting. In the manipulation phase, you'll look for the left of your chart to find an order block, imbalance, and support resistance flips. Any kind of price action structure that supports the downwards movement. As an entry, your best chances are opening the low time frames and looking for a market structure shift for our entry. Finally, finding targets is critical. Any liquidity areas or imbalances will do the trick. Great, let's move to an example. You can use this setup with a swing failure pattern. We'll focus on SFP with the second trading setup. The first thing you should focus on is the high quality break with large candlesticks and possible big imbalances. Later on, you'll witness the accumulation phase. You need a little patience. Let the trendline liquidity or equal highs liquidity form. This happens all the time, one of my favorite trade setups. Then comes the manipulation stage, which is basically stop loss hunting, but nothing else. How to enter this trade? Look to the left of your chart. Any imbalance, any supply, any usable price action structures. You can see the support resistance flip with the breaker block. Then the targets. Any equal lows, trendline liquidity, any imbalances that may pull the price. This will be the expansion phase. Quite a simple structure. The second trade setup is actually very similar to the first setup. As an extra step, find a previous swing failure pattern, or a weak break, or any previous liquidity hunt. Swing failure patterns are really important for us. It is an indication of price weakness and possible trend change combined with high quality breaks. The rest of the trading setup is the same. Just wait for the accumulation phase, then wait for the beginner trader stop loss orders to be hunted. Find yourself a clear target, then enter your trade. Okay, let's see an example. You must find a swing failure pattern, or at least a considerable swing failure pattern first. Then the rest of the trading setup was actually exactly the same. Let's go over again. Practice is the best cure for trading. 1. Confirm a SFP or any liquidity hunt. 2. Check for a high quality break. 3. Wait for the accumulation phase. 4. Let the liquidity zones appear. 5. Wait for the liquidity hunt, stop loss hunting as the manipulation phase. 6. Look for price action structures as imbalances or other supply areas. 7. Look for targets such as liquidity, imbalances, or other demand areas. This will be the expansion phase. Try to use low time frames, look for micro MSP or BOS to enter a trade. Last trading setup. This trading setup requires finding extremely powerful demand or supply areas from the high time frames and using them for your entries in low time frames. Imbalances with order blocks, breaker blocks, or Quasimodo areas are great demand and supply areas. Then the rest of the trade setup again is quite similar. Let's check the example. One of the most common questions that I get, which OB will work, which breaker block, which QML, which supply or demand will work. Guys, I have no idea. We do not care which one will work. It is so simple. Determine your supply or demand areas in high time frames and look for entries in low time frames. Price action is this simple. Recently, I tweeted this chart determining possible demand and supply areas. I had no idea which one was going to work. This demand area actually worked great and gave us a couple of entry points. Let's zoom in on this area and check what happened there. You can see the very long accumulation phase without any clear trend, a consolidation stage. Then you can point out liquidity areas and simply ask yourself, where could the stop loss orders be? Answer is trends and support resistance lines. Then the manipulation phase comes, hunting all those stop losses from the uptrend support line. And the expansion phase comes after. Same thing again, hunting the stop losses from the equal highs and liquidity downtrend. It is also pulled by the large imbalance that above. Okay folks, this is it. This adventure ends here. Power of 3 is a very simple and extremely powerful price action trading strategy for day traders and scalpers. You can use it in your trading life easily. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.